test your knowledge with this one. What is the primary financial risk faced in the young family stage of retirement planning?
Here are your options. A. Lack of investment opportunities. B. Complete dependence on pension income. C. High allocation to risk-free investments. Or D. Low savings due to discretionary spending and debt obligations.
Take a moment to pause the video and decide. The correct answer is option D. Let's see why. In the young family stage, income is stable but often consumed by lifestyle expenses and debt repayments, leaving limited room for savings. Let's tackle this exam question. How does the income replacement method estimate retirement needs? Here are your options. A. By calculating future expenses based on expected inflation rates. B. By assuming a fixed percentage of pre-retirement income will be needed. C. By considering only mandatory expenses and ignoring discretionary costs. Or D. By using investment returns to determine required savings. Take a moment to pause the video and decide. The correct answer is
option B. Let's see why. The income replacement method estimates retirement income needs as a percentage of pre-retirement earnings to maintain a similar lifestyle. Moving on to the next one. What is the main drawback of relying entirely on annuities for retirement income?
Here are your options. A. Annuities provide uncertain returns. B. Annuities are prone to high investment risks. C. Annuities may not keep up with inflation, reducing purchasing power over time. Or D. Annuities do not provide any guaranteed income. Take a moment to pause the video and decide. The correct answer is option C. Let's see why. Annuities offer stable income but often lack inflation protection, causing real purchasing power to decline over time. Which stage of life presents the highest risk of making poor investment decisions due to behavioral biases? Here are your options. A. Young earning years. B. Pre-retirement stage. C. Retirement stage. Or D. Middle earning years. Take a moment to pause the video and decide. The correct answer is option B. Let's see why. In the pre-retirement stage, emotions and fear of financial instability can lead to poor investment choices, such as excessive risk aversion or panic-driven decisions. Here is another practice question. Why is it crucial to maintain an emergency fund in retirement planning? Here are your options. A. To avoid premature withdrawals from long-term investments. B. To maximize returns by investing in risky assets. C. To eliminate all discretionary spending. Or D. To increase tax benefits on savings. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. Having an emergency fund helps cover unexpected expenses without disrupting the long-term retirement portfolio. Let's look at this next question. What is a key challenge of using the expense protection method for determining retirement needs? Here are your options. A. It does not account for medical expenses in retirement. B. It ignores the impact of inflation on future expenses. C. It assumes investment returns remain constant over time. Or D. It requires detailed listing and estimation of all future expenses. Take a moment to pause the video and decide. The correct answer is option D. Let's see why. The expense protection method involves a detailed breakdown of all expected expenses, making it complex and prone to miscalculations. Which factor significantly influences the real rate of return on retirement savings? Here are your options. A. Inflation rate. B. The number of dependents. C. The amount of discretionary spending. Or D. The tax rate on fixed deposits. Take a moment to pause the video and decide. The correct answer is option A. Let's see why. The real rate of return is determined by adjusting the nominal return on investments for the effects of inflation. What is a potential drawback of investing too conservatively during the accumulation phase? Here are your options. A. It increases exposure to market volatility. B. It may result in a retirement corpus that is insufficient to meet future needs. C. It guarantees higher returns but reduces flexibility. Or D. It eliminates the need for asset allocation adjustments. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. Low-risk investments may provide stability but can lead to a shortfall in retirement funds due to lower long-term returns. Test your knowledge with this one. Which approach can help retirees avoid outliving their savings? Here are your options. A. Investing all funds in low-risk fixed deposits. B. Spending a significant portion of savings in early retirement years. C. Creating a structured withdrawal plan that adjusts for inflation and life expectancy. Or D. Keeping all retirement funds in cash to avoid market risks. Take a moment to pause the video and decide. The correct answer is Option C. Let's see why. A structured withdrawal plan helps retirees manage expenses sustainably while considering longevity and inflation. Moving on to the next one. What is the main advantage of inflation-indexed bonds in a retirement portfolio? Here are your options. A. They offer guaranteed capital appreciation. B. They adjust interest payments based on inflation, preserving purchasing power. C. They provide tax-free returns. Or D. They eliminate the need for any other investments. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. Inflation-indexed bonds protect against inflation by adjusting interest payments to maintain real income value. Let's tackle this exam question. Why is it important to gradually shift from growth assets to income assets as retirement nears? Here are your options. A. To ensure maximum returns in the final years before retirement. B. To completely eliminate risk from the portfolio. C. To reduce exposure to market volatility and preserve accumulated wealth. Or D. To maximize tax benefits in retirement. Take a moment to pause the video and decide. The correct answer is Option C. Let's see why. Reducing exposure to volatile assets as retirement approaches helps protect accumulated savings from sudden market downturns. What is a key factor that determines the number of years retirement savings must last? Here are your options. A. Expected rate of return on investments. B. Life expectancy. C. Pre-retirement income level. Or D. Number of dependents. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. Life expectancy determines the duration for which retirement savings must provide income. Let's tackle this exam question. How can retirees manage the risk of lower than expected investment returns? Here are your options. A. By maintaining a diversified portfolio across asset classes. B. By investing only in gold and real estate. C. By withdrawing all funds immediately upon retirement. Or D. By relying solely on pension income. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. A diversified portfolio spreads risk and helps mitigate the impact of poor returns in any one investment type. Test your knowledge with this one. Which factor should be considered while selecting an annuity for retirement? Here are your options. A. The absence of any risk in annuity investments. B. The tax benefits of purchasing the annuity. C. The ability to withdraw funds at any time. Or D. Whether the annuity offers inflation protection. Take a moment to pause the video and decide. The correct answer is Option D. Let's see why. An annuity that adjusts for inflation ensures that purchasing power remains intact over time.
What is a common mistake individuals make in the pre-retirement stage? Here are your options. A. Investing too aggressively in high-risk assets. B. Ignoring the need to consolidate and rebalance their portfolio. C. Converting all investments into cash savings. Or D. Not taking on enough debt to fund retirement. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. Pre-retirement is a crucial stage for consolidating assets and adjusting investments to align with income needs in retirement. How does the savings-to-income ratio typically change over an individual's working life? Here are your options. A. It should increase as income rises and expenses stabilize. B. It should decrease steadily over time. C. It remains constant regardless of income level. Or D. It is not an important metric in financial planning. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. As income grows and expenses stabilize, individuals should save a higher percentage of their earnings for retirement. Moving on to the next one. What is the primary risk of holding a large portion of retirement savings in real estate? Here are your options. A. Real estate prices never appreciate. B. Low liquidity may make it difficult to access funds when needed. C. It guarantees rental income for life. Or D. It eliminates the need for other investments. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. Real estate is an illiquid asset, making it difficult to convert into cash for emergency or planned retirement needs. Moving on to the next one. What is the main drawback of delaying retirement savings until later years? Here are your options. A. It increases the savings required per month due to lost compounding benefits. B. It allows for higher investment flexibility. C. It reduces the need for financial planning. Or D. It ensures higher returns due to shorter investment duration. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Delayed savings require larger contributions, as there is less time for compound growth. Why is it necessary to regularly update a retirement plan? Here are your options. A. To eliminate all discretionary expenses. B. To ensure that savings targets align with changing financial conditions and goals. C. To ensure investments remain in high-risk assets. Or D. To fix investment returns at a constant rate. Take a moment to pause the video and decide. The correct answer is Option B. Let's see why. Periodic updates help align the retirement plan with life changes, inflation, and market conditions. What is the primary purpose of asset allocation in retirement planning? Here are your options. A. To balance risk and return based on the investor's stage in life. B. To maximize returns at all costs. C. To invest in only one asset class for simplicity. Or D. To minimize all investment risks to zero. Take a moment to pause the video and decide. The correct answer is Option A. Let's see why. Asset allocation ensures a balance between growth, income, and risk management at different life stages.